morning, everyone. My name is Ian LeMay. I have the privilege of serving as the president of the California Fresh Fruit Association, and I'd like to welcome our members and extend our thanks to our members who have joined us today for this webinar, California Wildfires Lessons Learned. The panelists today would like to make this webinar as interactive as possible. So please use the Q&A box as you see on the bottom there to ask any general or specific questions as we move through the presentation and conversation today. The California Fresh Fruit Association is proud to partner with our associate members, the Greenspan Public Adjusters, Rain and Hail Insurance Companies, and AJ Gallagher to bring this information to our members. As we all have seen in the recent years, California wildfires have significantly devastated many areas of the state. And just last year, had significant impact on air quality and the safety of our employees throughout the industry. Our panelists today are industry experts that will provide insight on how wildfires have affected their area of business and what we can expect for future wildfires and other natural disasters that could threaten our state. Before jumping into some questions, I would like to start off by having our three panelists introduce themselves and talk a little bit about their companies and their respective areas that they represent. First up this morning is Caroline Stevens with AJ Gallagher. Caroline, pass it over to you.
Thanks, Ian. Hi, I'm Caroline Stevens with Arthur J. Gallagher. Gallagher is about a $6 billion company with about 40,000 employees worldwide. I'm part of the nationwide agribusiness practice at Gallagher, and I've been here in our Fresno area for quite a long time and in the industry almost 30 years now. So appreciate being part of this panel today. Look forward to talking to everybody and hopefully giving some insights of how you can better prepare for your renewals and your respective businesses. And then I'm going to hand it over to Steve Severade and let him introduce himself.
Good morning, everybody. Thanks for joining us this morning. My name is Steve Severade. I'm a principal at the Greenspan Company Adjusters International. We are a public adjusting company. Many people don't know what that is. Essentially, we are consumer advocates advocating for policyholders after they suffer a major property insurance claim. And we have a lot of agriculture clients who we've helped, and we've had a lot of recent experience as a result of these wildfires, which brings us to this topic today. And I'm glad to be here. Thank you. I'll pass it on to Craig.
Thank you. Good morning, everyone. My name is Craig Gonzalez. I'm Senior Vice President with the California Division for Rain and Hail Insurance Service, LLC. We are the largest writer of federal multi-peril crop insurance in the U.S. We're one of 15 private companies authorized by the USDA Risk Management Agency to write multi-peril crop insurance in the U.S., also known as MPCI. And our Fresno division office services both California and Arizona. So we handle all marketing, underwriting, and claims out of the Fresno office. And our parent company, Chubb, is the world's largest publicly traded property and casualty insurance company. So with that, I'll turn it back over to Ian.
Thank you all for your time today and bringing your expertise to this conversation. Just a note for our members who are viewing the webinar today. We are recording this webinar and we'll be posting it in the coming days to our website. And so for anyone who would like to view this again or send it to some of your peers, please visit our website, cafreshfruit.com. So again, appreciate our panelists. And so we'll just jump into some questions that we have here. First one, let's just open it up to all panels here. What would you say is the #1 lesson your industry or company has learned from recent wildfires in California that we experienced just this last summer? Caroline, how about we jump to you?
Sure, thanks. I think probably one of the biggest lessons is that you really have to be flexible and you have to really pivot on whatever the latest issue is. Before we got started today, we were talking about just everything that's hitting our clients today, whether that be input costs, corrugated, insurance costs, really being able to be flexible, restructure programs if needed, relook at what you're doing. I think COVID has taught us that this last year too, that you really have to put a whole different lens on and look at your business and do things differently than you've ever done before.
Take it around the horn, Steve.
Thanks, Ian. Well, I would say if we haven't learned anything else from the number of recent wildfires and disasters and this changing climate, and it would be to be prepared. These things are happening more and more. They're going to continue to happen, and everybody should be prepared. And by be prepared, I mean understand your insurance. Talk to the Carolyn Stevens of the world. Make sure that's right. Have a cloud operation set up with photos and videos of whether it's your home or whether it's your business property. Have all that stuff ready to go in the cloud. Keep all those things to the side so that if something should happen, you're better prepared. And I think we've learned that that's a really important lesson, that a lot of our clients weren't prepared and didn't have those things set aside or prepared to be ready to go. And they had more difficulty recovering as a result of not being prepared.
Craig, how about your thoughts?
I'd really echo what Caroline and Steve said in being prepared. Preparation is key. And in the crop insurance sense, I would suggest that having your coverage in place annually, not gambling on what year to take it out, not gambling on what coverage level to take out for that year, because, the reality is, the year you do that, you're going to get hit, right? That's just kind of how things work. So to put it in place annually, expense it. I mean, if you got to look at it as a 5-gallon bucket, so be it. Look at it in that sense, and have it in place on an annual basis, and it's there for your protection and ultimately mitigate your risk, because who knows what's coming down the pike, Ian.
No, great points by all. Let's go to Steve. When are grapes covered by a company's business insurance policy, and when are they not? What are some of the things that we've seen in recent fire events where businesses didn't have enough coverage?
It's a great question, Ian. There has been a lot of confusion about that, especially with the wine, because a lot of wineries lost their grapes and lost their facilities as a result of these recent wildfires. And they really weren't sure where they were covered, when they were covered. When the grapes are on the vine, that goes to what Craig's point. You'd have to have crop insurance. Otherwise, in almost all instances, you're not covered under your business insurance policy. The grapes are covered once they come off the vine and they hit your facility. Whether they're processed or not processed, they become part of your insured property. But what we found some people in these wildfires that had picked the grapes before they were evacuated. The grapes were sitting in tanks or sitting and getting prepared to put into tanks, and then they had to leave, and smoke came through, fire came through, et cetera, and they were covered under your business owner's policy. Others ran off before getting the grapes off the vines and had no coverage for those grapes, even though they were completely destroyed. So they were in a much worse position. So it's important for people to know that if they hit your facility, they're picked, they hit your facility, they're in your process, whether they've been processed or not, they're still covered property. But up until that point, they're excluded from coverage under your business owner's policy.
Interesting. Well, that's a good segue, I think.
Sorry.
No, that's fine. A good segue to Caroline. Can a company that may not have or be in a fire area still get coverage for their property?
Yeah, I think definitely. And really just real quick to kind of add on to what Steve was saying about coverage, you really do need to look at your coverage depending on what carrier you're with, the type of coverage you have in place. Like Steve said, if it's still on the vine, it's not going to be covered. And then there's different valuations as you get to different types of policies out there, whether it's selling price once it's been picked, or whether it's just replacement cost and raw work in progress. So really paying attention to what is the valuation of your of your grapes, of the wine, of the juice at different stages. It becomes really important, and it does vary by carrier out there. As far as the question as of, if you're in a fire area, can you still get coverage? Yes, you definitely can. Again, it's that flexibility and looking at different ways of insuring some of that traditional property you've done one way may have to be split up and done very differently this year. So you should be looking at various different alternatives, whether it's, stock being pulled out of the package program. Maybe it used to be pulled out and it was on a stock throughput policy. And now it's coming back into the package because you can't get a stock throughput policy. I was just on the phone with one of our stock experts yesterday, and they were saying one of the things you have to look at is being really specific. Where do you need that stock coverage? What locations? Are there certain locations that you can really look and identify, okay, maybe I don't need, $1 million there. I only need $300,000 there. So structuring the policy is going to get you the coverage that you need, rather than just saying, I want, in years past, I want a big giant blanket limit and I need to have it all covered under one policy. It's not going to happen like that anymore. So again, being flexible and working through some different ways of ensuring that is going to get you the best result.
To just tack on to what Caroline said, we had a couple of wine clients in these fires that they had kind of changed their operations around and stored wine in different places. They'd had them in the American Canyon and they had that all covered, but then they had moved and sort of changed things around with COVID. And they started storing a lot more wine sort of at the farm, and they had no coverage for that wine. And they lost, hundreds of thousands of dollars worth of wine. So to Caroline's point, really important that you're paying attention to where you're keeping your wine and that it's a covered address for that wine. So I unfortunately saw some people that weren't paying enough attention to that really got burned, pardon the pun.
Puns are always welcome. Craig, going to you, multiple peril crop insurance. What crops are covered by MPCI?
So I think great question, Ian, and I'll touch on what is multiple peril crop insurance. MPCI, as it's known for. In the crop insurance world, we seem to love acronyms. So it's federally subsidized. It's broadly available throughout the U.S. And some of the benefits of MPCI, it's flexible. Growers can tailor their coverage, to fit the specific needs of their operation. It's affordable. The federal government actually subsidizes the premium. It's readily available. And by that, I mean the private sector controls the delivery, and it's competitive. And that translates to localized service for growers. And finally, it's predictable, up front. Unlike ad hoc disaster payments, crop insurance is very predictable, and the growers, the banks, whatnot, know upfront what their coverage is. Those are some of the benefits of MPCI. Crops, I think we're well over 60 crops now covered by traditional MPCI in California, and that number seems to increase every year. Some of the crops would include stone fruit, table grapes, cherries, blueberries, almonds. Almonds is the largest crop written in California, as you can probably imagine. You can purchase MPCI by the sales closing date. Now for 2021, that deadline is passed by crop county. But as an example, January 31st was the sales closing date for stone fruit, cherries, and table grapes.
Yeah, the season's upon us. We're only a couple weeks away, so it makes sense. Caroline, coming back to you, how can a business prepare for renewals? Are there any alternative options for them if they're in a fire area?
Yeah, no, that's a great question. I think the best thing, the theme of today is be prepared. And a lot of that is really, building those strong relationships, whether it's with your carrier, with your broker, with your business partners like Steve and his team, really knowing what you have, where it's located. Start early. So, start the preparations early. We have mid-year stewardship reviews, with our clients well in advance of the renewal to know what's going on, what are the challenges that they're seeing this year, and updating them on the market and helping them budget for what's going to hit in 6 months, So really to, again, start early, at least 6 months out. And then really be very, very detailed. Again, the devil is in the details on your locations, your values. There's a lot of modeling that's going on with insurance companies right now, really looking at, are you really in a fire area? What's your water source? What's close by? All that detail really helps prepare and put the client in the best position in front of the insurance company. So valuations, modeling, business income worksheets. No one likes to fill those out. We've been able for years to get away without having to submit those to carriers, and those are becoming incredibly critical. So I would say that's a really big thing, is looking at if something were to happen. We've seen those kind of losses happen in the industry out there. What would happen to our operations? What would we need to do to keep things moving and keep our business going? So that's going to be really critical in getting that together. And then probably the last thing would be making sure that you are really addressing any kind of carrier loss control recommendations. So if you've had carriers go out there and say you really need to, move pallets away from here, you need to have your normal sprinkler system upgrades or updates, making sure that those are all taken care of well in advance of the renewal is really going to help you get the best result out there.
And I guess going a bit off script here for all three of you, last year, California, of course, saw devastating wildfires. In my lifetime, I don't ever remember longstanding, orange skies across the state. Are you seeing more engagement from clients or with questions around wildfires and insurance coverages, or are you still feeling that the engagement is coming from the carrier to the client?
I think we have a lot of engagement direct with our clients, and our job is to prep them for what the carrier is going to expect. So I feel like that's, again, the job as a broker, is to make sure that we're well preparing our clients, working with the right partners to get that information together and putting them and presenting them to the carrier in the best light that we can do. So our engagement is direct with our clients. And then we're, again, kind of that go-between. We know what the carriers are looking for. We know what data is going to enable them to make a better decision on our client. So it's working that side of it too. So it is really on both sides.
I can tell you, Ian, from our standpoint, we're in a different space than Carolyn as advocates after an event happens, but we've had a record number of inquiries from people who were in or around the wildfire who weren't necessarily affected or lightly affected, but it's really been a light bulb moment for a lot of those people inquiring for us as to, what we see from claims and what they should be doing as they're interacting with brokers like Carolyn. So I would say that, people are a lot more in tune with this, and it's become a lot more of a reality in people's minds, other than, usually in the old days, people bought insurance because they had to, and they just thought it was something they had to do as part of the business. But now I think people are starting to appreciate, and Craig probably appreciates this too, because a lot of people didn't have crop insurance, and now the ones who did are looked as the smart ones, but I think people are paying a lot more attention, even people who didn't suffer losses are.
Yeah, 2020 taught us growers a lot about crop insurance, the value, particularly for wine grapes, that smoke taint is covered due to wildfire. And it taught a lot of those that didn't have coverage how important it is and how critical it is. And maybe I can back up a step and talk a little bit about what does multi-peril crop insurance cover, or crop insurance as most people call it, so to speak. It protects basically against unavoidable natural occurring events. So in generally speaking, weather-related perils such as rain, heat, freeze, hail, wind, etc. Some California crop policies, very few, but some cover or include revenue, but that's the exception. So yes, is wildfire covered? Absolutely. And again, it taught a lot of people a whole lot in 2020, and we experienced tremendous growth for this year in many of the wine grape growing regions of California, accordingly, as you can imagine. So, but again, wildfire, yes, it is covered. Direct damage from wildfire is covered, as well as smoke taint due to wildfire, which we experienced a lot of that last year. Smoke taint actually from wildfire adversely impacts wine grapes, and particularly in certain parts of California last year. So that aspect is absolutely covered. The key is performing tests via independent labs to confirm that certain smoke taint markers are in fact found in the berry sample. Is probably the short put it.
Greg, have you seen that go into any other commodities beyond wine grapes such as tables, raisins, stone fruit, anything like that?
Not yet, Ian, but I mean, that's obviously an excellent leading question. And again, kind of back to my original point of preparation, because, here we go again, right? We're in a drought year, perfect conditions. Granted, a lot of the fuel's been burnt, but I got to believe that there's still quote unquote fuel out there. And once again, we're dry. So here we go again.
Ooh, thanks. Steve, going to you. If a member has an older building on their farm and a fire occurs, how are they covered? What options does the business have?
So we saw a few of these. We have some clients. We had one client after the fire that had bought some vineyards, adjacent vineyards, and sort of grew and took over. And with those vineyards came some farmhouses or different dwellings and different buildings that they sort of inherited. They didn't build them or necessarily want them or need them. They found uses for them. And then the fires happened. And they said, well, what am I going to do with this old building? I'm not going to rebuild it. But they're still entitled to what's called the actual cash value of those buildings. Even if they don't rebuild, they still have value and they should still make sure they're insured. Fortunately for one of these clients, they had a large blanket policy that covered all of their buildings. So they had plenty of coverage. But some of those older buildings, those historic buildings that were built a long time ago, are very valuable. They're more expensive to build than new buildings. So understanding that value and making the most of it, we have one client that's actually taking 4 of those buildings that were lost and building one big building that has a better use for them. But they're able to capture the value from these 4 smaller buildings and actually build out a facility as a result of being properly covered and paying attention to how they can make that work. So it's when you're looking at your farm and you're looking at some inherited buildings, those can have a lot of value, a lot more than people, because they don't buy them. They don't buy that land for those buildings. They buy them for the land. But it's easy to just sort of discount them. But after a fire, they could become something that can really be something positive out of something really tragic, of being able to use that and put a nice facility or do something to enhance your property or your business. And then also on the counter side of that, which Caroline could probably speak to, we have also had clients that did that buying of different lots and sort of combining them, and then they weren't properly identified in the coverages of the insurance policy. The lots weren't properly, connected to the policy, or you call them the addresses, but or the lots or whatever. And so they had areas of their farms that had no coverage at all, no coverage for anything, because they weren't properly identified in the insurance policy. And that's why you really need somebody who understands ag and understands placement of coverage and making sure that there are no holes if you're buying and enlarging your footprint. Because we did, Ian, have a couple of clients that ran into that problem and had zero coverage in part of their farm, which they thought they were fully insured for. So, obviously that brings into a whole nother realm of discussion with carriers, but you don't want to be in that position.
Yeah, that's a really good point. I think really understanding where those assets are and making sure you've got a good track of them. And then also, Steve, very much what you were saying, some of these buildings, some are insured at actual cash value, some are insured at replacement cost valuation. What would it cost today to rebuild that building, even if it was 50 years old? And some of them can be stated value for historical buildings and things like that are very unique or have a unique, architecture to them. So it really is, again, kind of getting back to those details, understanding where they are, keeping track of them, and what does the business want to do with them if something were to happen.
Great points. Caroline, before we opened up the conversation today, you and I were talking about some increases in pricing. Obviously, topic today being wildfires. Everyone on the Zoom here is also familiar that COVID brought a whole new realm of hurdles for the industry to jump over. Can you touch on what our members should be seeing or should be expecting out there with regards to price increases?
Yeah, that's great. I unfortunately, with all the, not just the fires, but you look at the storms in Texas that are impacting a lot of our clients, all the hurricanes, using the Greek alphabet because they ran out of names, last year. it really all ties back to, this is all hitting the insurance industry, and insurance is one big pool of people and resources. And when something's gets hit in one area, whether it be wildfires specific to California, or it's Texas storms or hurricanes in Florida, they're all impacting our clients no matter where they're located. So the industry, and same thing in crop insurance. I mean, Chubb is a huge insurer. We work with them all the time. They have crop insurance, they have business insurance, but they also use the same reinsurers that are in all these different catastrophic events out there. So I think the biggest part of our job right now that we've had for this last year at Gallagher is really, prepping our clients, really helping them budget for, look what we're going to be seeing, property rate increases. And again, it varies by size of client, it varies by industry, it'll vary by where they're located. But we're seeing, everything is basically gone up. So property rates are up significantly. Auto rates continue to be up, even though you'd think that not as many people are driving around and people might have gotten rebates on their personal insurance, but commercial rates are still going up because of years of large losses. And casualty and the excess umbrella side has really been hit hard. That's probably where we've seen the biggest impact on our clients. So they're getting hit not only from the inputs like increased costs of corrugated materials, but they're also getting hit with these large insurance costs. So the best thing we can do is to work with them early and budget by line of coverage what we think those increases are going to look like. And then again, prepare, looking at the different things we talked about, the modeling, the valuation, changes to structure to really try to minimize those increases as much as we can at renewal.
That's great. That's great. Well, I really appreciate all three of your time today. I'll kick it back to each of you on any closing thoughts you might like to touch upon and share with our members. And as a reminder to those who are viewing the webinar today, all three of our panelists today are your peers of CFFA members. You can find their contact information in the CFFA roster. And if you need additional contact information, always please feel free to reach out to CFFA staff, whether that be myself or Courtney Razor, who is also on the webinar today. We are always happy to connect our members to their peer members. So kick it back. Steve, would you like to start on maybe closing comments?
Yeah, sure. Thanks. First of all, thank you, Ian, and thank you, Courtney, and the California Fresh Food Association for hosting this event. I would say that what people should be doing now is they should be developing their team for post-disaster recovery. And they should be doing it now rather than scurrying around after a disaster strikes and trying to figure out how to assemble the best claims team, how to deal with everything, what they should be doing. Put a plan in place now, have a disaster plan, coordinate with your broker, interview and choose a qualified public adjuster, such as Greenspan, to be in place before anything happens. And hopefully nothing will ever happen, but the better prepared you are, and spending a little time on the front end will make, when it's crazy, and I can tell you after these wildfires, our phones were ringing off the hook. We couldn't possibly handle everything that was coming through the door. We had to be kind of selective in order to give good service to the people we helped. The people that already have relationships with us, they're automatic, they're in. And we already know them, they already know us, and it makes recovering from disaster more efficient, more and also with better results. So I would say get your team together, get a disaster plan in place, coordinate your public adjuster and your broker as a team together, not competing with each other, but helping to have the best plan in place in case there is a disaster. And I hope for the people on this this webinar that doesn't happen to them. But as we've seen, it does happen. So that's my closing comments.
Thank you, Steve. Craig, how about over to you?
Yeah, thank you, Ian, Courtney, my fellow panelists, and of course, the California Fresh Food Association. I would simply say, for those of you with coverage, be sure to review your coverage, review your summary of coverage. when you get that issued, also known as a deck page in the P&C world. Review your coverage, make sure it's right, make sure everything's accurate. Secondly, in the event you experience weather issues, some sort of potential loss, maybe you don't think there's going to be a loss, but something happens out there in terms of a covered peril, let your agent know, turn in a notice of damage. It puts us on notice. It gives us a chance to go out, inspect, verify, and it meets the requirements of the policy because it is a federal regulated and subsidized policy. So there are certain federal requirements that we absolutely must meet. And lastly, if you do not have coverage, please reach out to your agent and ask that inquire at this point. That way you're in line for next year. And certainly a bit of marketing, a la Steve here. Please ask for rain and hail insurance because it's your agent's choice as to where they place you. So with that, again, thank you.
Thanks, Craig. Caroline?
Great. Well, thanks, Ian and Courtney and the California Fresh Fruit Association and the panelists. You guys were great today. I think the key theme here continues to be prepared. If there's a big kind of tagline from it, that's probably what it is. And also, I think you can tell by the panelists here is make sure you're contacting your experts because Craig and Steve, they're experts in their area. I know with Steve, we've worked with Greenspan with our clients, and you want the best people working for you and representing you well in the market. So think about that when you're making your choices of who you're out there talking to, working with on a regular basis. So be prepared, start early, and use those resources that are out there for you that the association is graciously put together. So that's fantastic.
Again, thank each of you for your time today. Thank you for your continued support of the California Fresh Fruit Association. We can't do our job in advocating on behalf of the fresh fruit industry of California without each of your support. And again, as I've stated earlier, we have been recording this webinar today and we'll be posting it on our website in the coming days. So please, if you would like to share, we'll make that available to our membership. And here in 2021, while we didn't get to engage directly with our membership in 2020, we're eagerly moving through our color schemes of state mandates and look forward to being with all of you in person in the coming months. So please stay safe, stay healthy, and as always, please reach out to the Fresh Fruit Association with any questions or concerns you have. Thank you everyone for your time.